After a rough few years for returns, hedge funds seem to be sitting out the recent market volatility. Leslie Picker is here to explain what is going. Did everybody just go to the beach? Is that what happened? They had a good first half of the year. They said, "Oh, I'm out."
They saw the weather forecast. It's supposed to be low 80s and sunny, and they said, "Hamptons market volatility. I think I'll stick with the Hamptons." But no, they really are. They're sitting this one out. At least this time, on average, the industry is up this year. Equity long short returning almost 10%. Excuse me. After a few rough years, hedge fund managers don't want to do anything right now that might disrupt those gains. So they've been pulling back on their exposure to the market and not participating in the recent sell-off. Those I speak with point to what they see as, quote, untradeable macro risks. These are things like the trade war, Brexit, rates, commodities, specifically what's going on with oil right now, Hong Kong protests, not to mention market valuations at what they see as lofty levels 10 years into a cycle. Now, Nomura says this lack of hedge fund participation and technical aspects surrounding quant funds in particular could actually set up the market for another bout of volatility in the next few weeks. The firm adds that this second wave could be even worse than the one this week, not ruling out the possibility of a, quote, Lehman-like shock. So the question for the average investor out there is, if the so-called smart money is not participating, should you be?
Anthony, thank you, Leslie, but we should get Anthony's take on this too, because this is your life.
It's my life, and in some ways, I want to personally thank the Trump administration for creating a renaissance in the hedge fund investment activity. Because at the end of the day, what's happening now for Skybridge and others is more RFPs are being put out, and more people are looking to allocate, because you've got so much uncertainty and you have so many people that are trying to hit a actuarial target. And when you've got rates where they are right now, I would have never predicted the influx of capital into hedge funds, because you would just play that ETF 5 basis point trade. Rates are going lower, stocks and bonds going higher. But you've got so much turmoil right now that I predict there'll be a huge flood of capital.
Anthony, Leslie was on yesterday, and we talked about, and we just had a conversation how the legends, the icons, not just Carl Icahn, but the icons of the hedge fund business are over, right? That was the argument.
Well, they may or may not be over. I mean, but for Skybridge Capital, we've got a group of what I would call exceptional managers that are not in that iconic space. And I personally think that there's a life cycle to that, too. You know, if somebody's worth $30, $40 billion as a result of successful investing, I can see why they're on the beach in the Hamptons. But you have a very large group of new generation hedge fund managers right now that are doing exceptionally well in this market. And we're excited to be allocating those people.
They just don't have like that big personality kind of brand. Like
none of us in the hedge fund industry have a big personality, though, Leslie.
No, none of them.
It's all very
low-key guys.
Keep your head, below the clouds.